Hello, welcome back to Win FS Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm going to bring you to a wonderful topic that has to do with mathematical principle. So, if you haven't subscribed to this channel, do your best to do that so that YouTube will push us to a high level of audience. Okay, and actually share to your friends so that you can be able to go far in doing this content so that you can be able to get what it takes to become financially free. How to mathematically trade trend lines in forex synthetic markets. That is the topic we're going to discuss today. So before I go to the practical part of this, I have to read out this this document so that you'll be able to flow along while I show this on the chart. Every trend line models impulse or correction components of price action. Both impulse and correction components are not parallel unless during rate gap events. Okay, hence they are 99% of time at certain characteristics angle of advance. This angle tends to be more accurate at higher time frame. The size of this angle affects the output signal. Okay, so the bigger the angle, the longer it takes for the impulse signal to start, while the smaller the angle, the shorter the time it will take for the output impulse signal. Retracement paths have to saturate at certain higher time frame, M15, M30, H1, any of them. Okay, retracement paths have to saturate at certain higher time frame for the new impulse to create a short signal. We only trade the impulse. Minors and measures matrices become complex problems to resolve in both correction and impulse path. Okay, this I'm gonna explain this on the chart. I'm going to talk more about this. Multi-time frame plan analysis can pose problems during trend line analysis, okay? But proper risk management can solve all those problems. We need breakout or retest signal in the direction of impulse path in order to enter for a trade. Buy only during the uptrend and sell during downtrends. Be mindful of consolidation and change of trend events, okay? So you really need to be taking trade at the middle of the major trend, okay? You should supposed to know how to predict this, like the position of a trend, whether it's in the beginning or in the middle or at the end. So you don't usually need to trade a trend line at the end of the trend because it will be consolidating. So you really need to trade it near the beginning or in the middle. Okay. So right now I'm going to start working on this. Okay, this is volatility 75 1s index in the 1 hour time frame. So we can actually do top down analysis from the H4. We can go further to higher time frame to see the other type of trend, like other forms of trend. The higher you go, like the bigger the time frame, the more you see the true trend or the true direction of the market. Okay, so if you check on the weekly time frame, you see that uh, the trend is like is modeled by a plan like this. So you have to join the swing point, the turning point. You need to join the two turning points. Okay. So you have to actually do the higher time frame analysis. So you have here, this is a swing, and so this is a swing. This is also a swing. So you see that you also need to look for the upper trend line. Trend line comes into the upper and lower trend line. So if you check this, this is a swing. We have a swing here, swing, swing. So just join or use a parallel line. Just draw parallel to any trend line. The first that you have three, draw a parallel line and connect it to a swing. So you see that this is down trend market. Okay, so at least you know where the market is going in the weekly time frame, so you can go to the 4 hours or the 1 hour time frame. So let's use 1 hour. So in 1 hour time frame, if a path, because the trend should be defined along a path, which is also a plane. So we have this plane here, we have this plane. When you join the swing lanes, then you can get a plane. Planes should be bounded by two trend line. And so you see that this is a plane and the direction of this plane is downwards. Okay. So here we now say that this market is currently downtrend. Okay. Remember, this is volatility market, so trends can happen within a day or can happen within 2 days, or it can happen in a few hours. So you have to understand what you're doing. So here we have any part that have at least two break of structures will be a trend. So we have one break of structure there and another break of structure. So this makes a trend. So now for you to actually get a signal here, you have to wait for some retracement to happen after a break of structure happens. So here we have break of structure and then price break here and then move like this. Okay, so you now wait for correction or retracement. So in the 15 minutes time frame, I'm going to show you what I mean by correction and impulse. Okay, this movement that goes against the trend, which is the downward trend, is called the impulse. Okay, you can see that it is at an angle. uh, you see this, it is at an angle. See the impulse, this is an impulse. The impulse starts from a swing to another swing. So a downtrend market is making lower highs and lower lows. So this high is this high is lower than this high. So it's making lower highs and lower lows. So this low is lower than this low. Okay, so this angle between the impulse um, final point or saturation point here and the beginning of a retracement is called the angle of advance. So this angle keep keep the price in a plane, a retracement plane. So we have a retracement plane. Okay, so we just bound the retracement with two trend lines by connecting the swing points, at least two, and then extend it. So what you need to do is to wait for price. Actually, you are drawing the line of base fit. So when you are drawing the line of base fit, you are trying to connect as much possible swing as you can. Okay, and so you have this. So the only way to actually continue this trend is to wait for breakout of this plane, the retracement plane. When price break out of retracement plane and retest it, is a sign that the retracement have saturated and the impulse is going to start. So the best way to place your stop loss is to place your stop loss outside the plane in such a way that the location of that stop loss is outside the plane. That's what I mean. So you have to locate it somewhere here outside the plane. Even though if you look at it geometrically, when you place your SL here, it's still cutting through the plane. It doesn't matter. At least uh the the area, the region of intersection between the retracement plane and the major impulse plane, which is this one, this plane is the major impulse plane. This plane, we are seeing this plane is the major impulse plane. Okay, bounded by these two lines. So once the stop loss is there, it can never be triggered. So you are going to ride this market till when you decide to stop. Okay, actually at higher time frame you can see possible key levels where you can take your profit. You can decide to take your profit at this level simply because our price is a key level, like where supply traders are pushing price lower, but it was broken by buyers. So buyers broke this area, so you can take your profit so that it will never start buying. Like you will not have issue with buyers because they can decide to buy this market here, because we have let me show you. um, we have this we have this, yeah, we have this. Okay, we have this. uh, we have this here. Okay, you see that this is also a blend and price break it. So maybe the second TP will be here, because price can decide to come and touch here. So you have to manage your risk. You can try your SL to enter and then hold the trade longer. Your your first TP will be here, second TP will be here. And then this area was a very strong demand area, so you can also place your del TP there. But all these are just risky, because the only TP that is less risky is the first TP, which is here. And if you go back to the lower time frame, you see that the price is pushing, keep pushing, and the first TP is about to hit, which is somewhere here. Okay, so that's how to trade the trend. Okay, so I'm going to check on forex market. Example will be on gold, so that you also learn how to do the same thing on the forex market. Actually, we did on volatility or synthetic market with a downtrend market. You can as well do it with uptrend market. Let's go to H4 and get when this market is going upwards. Okay, so when it is actually trending upwards, maybe in the daily time frame. Okay, we have yes, we have a clear uptrend along here. We have a clear uptrend here, because we have along this H4, along this H4 part, we have one break of structure. Okay, and then we have another break of structure here, price break here. Okay, uh, these are okay, this you can't use this. We have break of structure here, price break here. If you want to see the nature of this break, let's change the color to um this. You see that the break is enough to move price to the upside. Okay, in the 30 minutes time frame, you or 1 hour time frame, you can see the break. So you see how the structure, the market creates M's and W and then break it. So when this break, when you have this, you will see that we have two break of structure, right? So you are waiting for a retracement to create. You are waiting for a retracement to create um, towards the broken level, and you want price to violate the retracement part. So market come with a lot of geometrical problems. Some are big, some are small, some are deep, some are shallow. So price have to break out of this retracement. So you should enter this market, should buy here. Okay, this is our hourly time frame. You should buy here and put your SL outside the plan, the retracement plan, meaning that you first of all you need to model the major trend plan. This is very, very necessary. Okay, so when you do that, you now have to enter here and put your SL just about the point of intersection, basically, not touching it, but it should be in your favor. So, and then though most time the risk can be depends on time frame of entry, but you are making massive profit. This is 1:3, other 1:3 risk reward. Okay, let's go to goods. Let's go to good and see something on forex market. Okay, right now this is gold chart in the forex market. So we go to the higher time frame, at least to know the overall direction. Maybe let's use the daily time frame. Okay, so top down analysis is very, very important, so that we know where the market is heading. So you can use monthly, weekly, daily for your top down analysis. Try to use the one that show you the clear behavior in the market. So we have this line like this. You just draw those boundaries showing the swinging, and then we have this line like this. Okay, so basically we can say that the market is trading, the gold is trading. Let's have these 2 points is okay to draw a line. So gold is trading between inside this triangle. Can get this. Gold is trading inside this triangle, but you can notice a break of this structure here. Um, there's a break of structure there, and in the daily time frame. But the thing is that gold is not respecting that break of structure, because right now the day is trying to close below that structure. Okay, so we go to H4. When you check H4, what are we seeing? So you need to go to H4 to see uh, the, the major swings where you can basically have area of value or interest. And so we have in this H4, you notice that we can buy gold somehow, because at least that break of structure in the daily time frame shows that after a retest we should look for buy. So this is a very strong support. Price came there, keep rejecting, so we can buy gold. Okay, so how do we buy gold using the trend line? I'm going to now work on the I'm now working on the 15 minutes time frame. So how do we buy gold using the trend line? First of all, you have to model the direction, the current direction in the M15 time frame. So we have that you see that gold have been trading like this, and then we have um, this. So you see, we are trying to actually buy gold because we are trading in the uptrend direction, and so the only way to trade uptrend is to wait for a retracement to happen, and that retracement will be against uptrend, which is selling market or selling signals or downwards price movement, which have actually happened. And then we want the assets to violate that downtrend line. So this is a downtrend line, so we want gold to violate it. So that is what it's doing. It have actually broken this, and so we are going to buy gold here and put stop loss outside the plan, the retracement plan. And how do you know the accurate retracement plan? You can know the accurate retracement plan when you get the measure plan, the measure trend plan, which is an upward trend. And so this is the measure. Just connect points, not swing points. And so you have to actually buy good here and put your stop loss here, just below the intersection of, I'm sorry, about the intersection of the retracement plan and the major trend plan. So you place your SL, and then you are taking the goods, you are targeting the good to reach uh, a kind of peep of at 1 point or 310 pips based on the way you calculate your pips. Okay, so that is it. If you are using points, then 1 point is $100. But if you are using pips, then 1 pip is $10. Okay, for good. I'll be ending this video. Next time you trade trends, try to follow this idea. Make sure you actually join my VIP signal channels so that you will flow with me and trade my signals. I'm going to show you something that you should bear witness of. Let me show you. Uh, let's head on. Okay, you see where we put the SL, and then we actually bought. We are starting here. It's going up. I seen it. Each position is running on the $200. This is a real account. I'm not going to show you the trade because it's personal. And you see where you see the position. This is over 100 pips, and it's still pushing with $1 per pips, or a kind of 300, 200, 1000 pips. I'm sorry, a kind of 10 pips with $10 per pips. So it depends on how you calculate your pips. So the way you calculate pips determine the pip value or point value. Okay, so that is it. When you join VIP, we see the accurate formulas for calculating pips and for calculating loss sizes. Actually, we have formula for risk management. You have to join our VIP if you want to succeed in this game. We have VIP for Forex, we have VIP for boom and crash, we have VIP for synthetic and Forex. Like synthetic and Forex market are in the same VIP, while boom and crash is just separate. These are two major signal services we provide. Thank you and bye for now.